What's up, guys? Good night. How's everybody doing? How you guys doing? I hope you guys had a great day. I got a really good stream in store for us tonight. We have some serious things going on right now. Bitcoin's getting crushed. Yields are ripping and roaring. Guess what? We have sound. Thank you guys for joining me tonight. I'm Justin. This is the Ivy League live stream. We're going to run through some charts. We're going to run through what was strong, what was weak today. We're going to talk about education. We're going to talk about being a dog, having the grit, doing what we need to do to help you get you where you need to be, what I need to do to get where I want to be, and just having that passion, that fire, that dog in you to be able to come in, put in the work. This stuff takes a lot of work, to be good at it and to be, just to have yourself knowing that you're good enough to do it and accomplish it, right? Celebrating the small wins, the small losses that you learn from. All right, so we're going to dive into it. Today was one heck of a day. We had a huge trade on AMD, another one, right? Another, for me, over 50% gain on AMD today, right? Members, if you were there, if you're new and you're not familiar, we do trade right here, youtube.com, Ivy League Trading. We trade from 7:30. We come in at 7:30, 7 o'clock, get our game plan, run through the news, get our levels, set ourselves up for a successful day, right? You can, if you appreciate any of this work, hit that like button, subscribe. It means a lot, all right? If you're grateful for some of the things that we try to put out for you guys, we do more than just go over charts and things like that. We really want you to be able to start learning and being able to put the picture together and being able to look forward. If this happens, what's going to cause this to do that? And you can make better decisions and get yourself where you want to be in life, right? But in order for you to do that, you need to put in the work, right? The trial and error, the blood, the sweat, the tears, the good, the bad. You need to celebrate every single little win. Celebrate the losses. As long as you've learned from them and you've bounced back, you got to celebrate it, right? You got to feel it. You got to embrace it. And you got to have that grit, what I call that dog in you, right? The title of this thumbnail, the title of this show is How to Crush Your Competition. Well, that's how you do it, right? People don't think so, but trading takes work, right? Just like any athlete that's out there, right? It takes work. You have to train. This is not just get rich quick, but you can damn sure get rich if you have that dog and that grit in you, right? So we're going to help you do what we can here so you can hopefully have an idea, a better understanding of what's going on in the markets. If you're new, please comment down below so we know, right? So if we go over things, we don't have to, we run through them, and if you're not understanding anything that it is that I'm saying, anything that's on the chart, okay, we'll go over some of those things. If you enjoy the content, let me know. Right? Comment down below. Again, hit that like button. Subscribe if you have not subscribed. We put out a lot of work, a lot of good information, and if you're grateful for that, that's all. That lets us know, right? That lets us know by you guys hitting the like button and subscribing. You guys appreciate it, and I continue to do this. And I will also be able to get to a point where I can bring some real financial advisors on here. That is my goal. My goal here is to help you. Free 99. So I want to stress to you guys the importance of embracing the small winners, the losers, the big winners. Right? You got to put in your work. Go back over your trades. How were you feeling? Why were you in that trade? Did you go by the list that we have, that I have not yet put together because I just kind of started this channel? Why are you in the trade? Where are you taking profits? Where is your stop loss if you're wrong? Has anything changed in that trade? Has anything changed about that trade? Has anything about that trade changed? All right. I want to give you guys a saying real quick, okay? Because me as a person, if I say something, I do it. I come on here every day, every night. I give you guys my analysis. I put my neck out there. I don't care if I'm wrong because I'm going to be wrong eventually, but I have been doing this for close to 10 years now. So I am comfortable being able to say my opinion. I think this is going to take place, right? Last night I discussed a level on the triple Qs. Well, we got to it today. I didn't think we would get there today. I figured it would be a couple more days, if not a week. But we got there today. You have to be ready for it. You have to put in the work. You got to seriously train yourself like an athlete and cross your T's and dot your I's in this game. You need to know the math. You can't just let you're in weekly options and you're getting a 20% loser. Well, you damn sure better have 25% winners and 40% winners coming in more than you're getting those losers, because that number is only going to last so long before you're out the game, right? It's all about losing. Be great at losing. I'm great at losing. At least that's what I come in every day. That is my main focus, right? That is my main focus, is how good am I going to be today losing if I'm wrong? All right. One thing for you guys, right? This is a great saying. I love it. I live by it. You sleep on a win, you'll wake up with a loss. Think about that, right? You sleep on a win, you're going to wake up with a loss. That means don't get too comfortable, right? The market will put you right in your place. All right? So I have a lot of stuff. I just want you guys to know, if you guys come in, put in the work, let me know. If you're new to this channel, comment down below. Follow me on Twitter. My Twitter address is in the link in the bio. Ivy League Trading, twitter.com. I post up a lot of charts. I post a lot of questionnaires. I post a lot of info. Charts from trading charts, as in, from Bitcoin to gold to equities, technology, healthcare, sectors, right? I post up charts with rates, unemployment, right? Fed funds rate versus unemployment. Just a lot of different type of charts that you'll get from institutional places, right? From Bank of America, all that fun stuff. So go ahead, follow me, and if you haven't done so already, please hit that like button, subscribe, so we can continue to bring this forward. And you would be helping me be able to bring some financial people on here who I'd like to interview, talk markets, bring some education and some actual value to your ass. All right, because there's a lot of junk out there, and this channel is going to separate us from them, right? You're going to be able to understand how things work. I just need you guys, if you guys have any questions, comment down below, guys. Let's get into it. Remember this when you wake up tomorrow again. You sleep on a win, you're going to wake up with a loss. Remember that. And if you're down, if you've had a bad day, a bad week, a bad year, you got to keep on pushing. You got to keep pushing, man. I'm telling you. Keep pushing, right? If you're having any trouble, reach out. We have a great community of traders in here throughout the day and on the lives, right? If you're having trouble, let's figure it out. If you'd like to work with us, my email address is in the link in the bio as well. So again, follow me on Twitter. I post a lot of good stuff, guys. So rates. Let's talk 10-year rates, right? 10-year rates are ripping. Let's talk Bitcoin. Bitcoin is doing the opposite of ripping right now, right? What caused all this? Look at that, right? I feel like we could have felt this and we should have seen it coming, right? This thing was just hanging out for far too long and could not break above an area of supply. There is so much supply ahead. It is hard to break through that area the first try. And I told you guys that quite a few times on this live stream a couple days ago, right? So I have not read into like a reason why. I don't think there's like a necessary, I don't necessarily think that there's a specific reason other than the fact that they're selling. The fact that it could not break higher, and you finally made that last push up into 30,000 and it made it resistance, and that is all it needed, right? That's all it needed. It could not break above. They took their profits, right? You got to think about things, right? Think about What's going on right now? I feel like we have a lot of headwinds. This is going to lead me into the FOMC minutes. Things feel like they're tightening up. The market's, just pulling back, and it's not it's just, the markets are pulling back, but it also feels like you have this stuff with China going on, right? People are trying to collect their money for the houses they don't have. There's real estate problems that are blowing up. China wants to say that we're not giving our data out anymore. What? So just because you have a problem, you don't want to release it? What? Anyway, let's move on from that. I told you guys, when the S&Ps are trading at 20 times forward earnings, institutional ownership, it's going to be hard for them to buy it. Why is that? Well, more likely they are holding these and buying these and don't plan on selling them for at least 5 years, right? Looking back on some of the data that I've seen, if you just looking back even in the 90s when the S&Ps were trading at a 20 times multiple, you had a negative return in that 5-year span. A negative return. Think about that. So there needs to be a reason for buying to take place, right? If the valuations are overextended, it's going to come to a point where the buyers just aren't buying no more and they turn to taking profit. Right? They lock those in. And what do? They roll it over into something else. So we need to find out where they're going with that money, because it leaves one place and it goes to another. Tonight we're going to find it. Bitcoin again had a huge area of supply up here. All right. We should have seen this coming. It just happens. I'm not going to say it, but join us on the live tomorrow. I tell you, I've said this many, many times. I think I did it last week or 2 weeks ago, right? I'm not even going to, as bad as I want to tell it to you, right? Join us on the live tomorrow. 32,000, right? 32,000, it just couldn't do it, right? So I have to tell you, if you are not going up, it's only a matter of time before you go down, right? I've seen it far too many times. When something is just sitting there for so long and so long and so long, and it doesn't go up, it's you don't know, but there's a time when you can read in the pattern. If we were to look at Bitcoin, you can just look at it and tell it was about to fall off a cliff, right? Look at this half-hour chart, okay? Look at this. You can just look at it and say, yeah, things look like, because it put in this curve, right? You see that curve? You don't have curves here. You have a straight down move. It picks itself back up. But this was just like coming right over the waterfall, right? Take this chart, print it out, post it up on your wall, put it up next to your monitor. I don't care. Because if you fail to see this again, this is going to cost you money. You're not going to be able to take part in this if you don't know the patterns. I tell you guys all the time, I have a ton of charts that I have in a folder, right? I have playbooks, I have Fed Day patterns, I have CPI patterns, and I've only collected them for the past couple years because it's been important, right? It was never that important before. So remember this, right? You have this huge base that you've just been putting in for quite a while now. Turn that upper base into resistance, right? And this is the top range. This double top, bang, bang, that was it, right? Right? Made it resistance. Then you come down and look at it, making it resistance. It sells off a little bit, comes back up. See that wedge we have in there? It's following the wedge. What's it do? It rolls over, just like a waterfall, guys. Like, this pattern is there's so much I could say about this thing where it literally just, boom, right? Remember this pattern. I don't care if it's a 15-minute chart, 5-minute chart. Remember it. You're going to see it again. You're going to see it again. All right? So Bitcoin right now is on its way down to where I don't know. We have a range here. I think it's down at 25,000. I think this is a sell-off. It looks pretty meaningful in a sense. You've had it here before. You see the rollover? To the bottom left here, you see that rollover? You want to take notice to when those things start to happen and you're making that resistance, that upper part resistance, and it rolls itself over, then you know you're getting that rollover effect. And when it gets to the end of that rollover, you should know that you have a decent amount of downward downward move left. So I have this range down here. We'll see what happens if it gets to it. 25 to about 23. Right? It's a $2,000 range there. Bitcoin on its way down. The volume actually wasn't as big as you would expect, right? Look at that. You had some better days as far as the buying goes. If you hold this level, which I don't think you will, I think we do hold 23, right? I think we do hold 23. Now, things are starting to get worse, right? Obviously, you want to use your RSI. This gave you negative divergence the whole way through, guys. Ladies and gents, look at this negative divergence. The stock's pushing up higher, right? You make a new high, but what's the RSI do? Makes a new low, right? We make a second new high. Nope. Second or third new low. One more time, for the people in the back, we make a new high with a lower RSI. Like, share, and subscribe, right? This is the stuff we want to teach you here. Take notice into everything that's going on. All right, guys, 10-year yields still ripping. They're still ripping, guys. 10-year yields are still just, look at that. That's insane, guys. All right, I'm hoping that we can get a pullback in these yields, right? I don't know if we're going to. We've already broken ourselves up and out. Now we are literally putting in new highs for the 10-year. This 10-year is at record highs back when. Where is this picture? There you go, guys. Bill Clinton, just to put it in perspective, Bill Clinton was president the last time you got to this 7.5 U.S. home mortgage rate. When mortgage rates were 7.55, Bill Clinton was in office, right? For every snapback, there's an opposite reaction as well. I want you guys to remember that. It may take time. We may just keep climbing, right? We may keep climbing. This is important. When do the buyers stop buying, right? That's going to help CPI out a whole lot. I don't have anything to drink. All right. So, again, the FOMC minutes came out yesterday. We talked about that, right? I want to stress to you guys that this is backwards looking data. You did not have this stuff going on with China. You didn't have equity markets pulling back. It was just a lovely old time. We were just in a ripping bull market, right? When these Fed minutes were taken. This data and all the other data that we get, guys, you have to remember is backwards looking. Okay? It's backwards looking because you have, it's hard to put into context. Like, people keep saying that this is only happening because of liquidity and this and that, like it should have already happened. It should not have already happened. I don't understand the surprise because 2006, right? Let's go into the SPX real quick. Let's go to the SPX, right? People keep saying that it's only being held up because of this and that and this, because of liquidity from the government, from the Fed. Well, 2006, let's go back. Let's just go back. Why are we so surprised? It's only been maybe a year and a half since they've started raising rates, right? It hasn't been that long. 2022, right? End of 2021. We're into 2023 now. Look at this. 2006, right? I'm pretty sure they started raising in 2004. They raised them in 2004, 2 years, and it wasn't until 1, 2, 3, the fourth year from when they started raising, and then 1 year after they stopped raising. Okay? From the last rate hike is when you got that unemployment. It's like 11 months, right? 11 to 13 months when you started to see that uptick. right? It was still on lows and trying to make its way up when they stopped, right? They got to that target range, they stopped. Literally to the T about a year, right? So if we raise rates here, 1, 2. So this technically should be like 2024. Not saying that we're going to get 2008. Not saying that at all. But the fact that this keeps happening where people are saying we're only being held up from the government, we're only being held up because of the Fed's liquidity, I disagree with that, right? I disagree with that cold-heartedly for a lot of reasons, right? A lot of reasons. The Atlanta Fed again raised their target for GDP. That's to be expected. So if you're new here, look at this chart. I'm sorry to keep bringing it up, but it's important. This shows you in a nutshell, you shouldn't be surprised. 2 years prior to rate hikes, during rate hike cycle, right, you get an increase on GDP because you're coming from a state of quantitative easing. It takes time for that quantitative easing to just run through and get filtered out. 2 years after, 1.8. That's just the first slide. This should not surprise you. This is the data, right? 1969 to 2018, right? 2015, 2.6, 2.4 during, 0.6 2 years afterwards, right? Should not be surprised there, guys. I'm really curious how the Fed comes out with Jackson Hole, okay? Disposable spending is getting hit from the grocery stores to interest rates, rates on credit cards, rates on homes. People are not, energy costs. People aren't going to have that much extra money to spend, and it's only going to take us a little bit of time until we really get there. All right? So, corporate rates are specifically, based, not necessarily, but the majority are, these corporate rates are going to be getting hit by this 10-year. If you have companies that start running out of capital in the next year to 2 years, and we're still here, I don't think we'll be here in 2 years, but into next year, if for some reason, right, people, they do not collect money from their services or goods, and people are slowing on spending, so they're not selling as many of their goods and services, when do they tap into their cash that they have, their reserves, and when do they have to collect more money? When does that cash run out? It could start to come, right? It could start to come, and they're going to have to pay a higher rate and possibly not get as much as they'd like as well. So things are coming. Financial conditions, right? They have eased. Oh my gosh. I know it's on here. Finance. Why is it not on here? All right, it's all good. I did it Sunday, guys. Anyway, so we're going to go through charts real quick, and we're going to go through the trade of the day. Today, the trade of the day was AMD. Let's take it to the charts. All right, AMD was the trade of the day, guys. I got over 50% on this trade. All right, there's a big lesson in this trade, and I want you guys to learn from it. Right, there's a lot of time and experience that goes into this trade. Right, what I'm about to explain to you from what I saw. Guys. Let's take it to a 3-minute chart. So, right off the bat, I see AMD is weak off the bell. Okay, let's take it to 2 charts real quick. This stuff is this stuff is important for a few reasons. All right, give me 1 second. Let's put up the SPY. Okay, matter of fact, we're going to put the SPY up right here on the left-hand side, and we're going to do a 3-minute chart. It's on a 3-minute chart. Okay, because I want you guys to see something. If you do not use the indexes like as your guide, right? Whether it's the Qs, the SPY, the IWM, the Dow, all of them for that matter, and see who's leading, see who's lagging, right? Is the Dow leading? Are the Qs leading? Okay, and to what direction, up or down. Who's leading up and who's leading down, and who do they follow? Do they follow the leader to the upside, or are they going to follow the leader to the downside? In the first 20 minutes, you'll be able to recognize that. I promise. Look at all of your indexes. They're going to tell you where institutional money flow is going. It's going to help tell you, right? It's going to help paint the picture for you what sectors are strong, right? Is it Dow names? Is it tech, right? Is it healthcare? You're going to be able to find those things out by looking at the indices, the first few minutes of the morning, or even the past couple of days, just getting an understanding that that's where you guys need to be looking. All right. So here we go. I'll leave the volume up there. Let's go to this real quick. This is important because this is a great lesson, guys. You guys are going to understand a few things because there's some things that happened in this trade. There's a reason why I got out when I got out. There's a reason I didn't just let this trade happen all day, right? There's a reason for all that. So today we were getting a gap down or a gap up on the S&Ps. Okay, we got a gap up on the S&Ps today. I'm going to get into this trade, and then we're going to go into the markets and find out what is strong, what is weak, where do we want to position ourselves tomorrow and going into next week, right? At least where I'm going to position myself. So that's crazy that's where we took. No, that's the SPY. Where did AMD get to today? It didn't get very far, right? There's a lot in this, okay? I need you to bear with me. Again, if you want to succeed and you want to fight, you want that nice car, you want that nice home, listen to me, all right? This is the work. This is bringing the dog out. I'm painting the picture for you. If you want to go watch other things, somebody put up $30,000, fake account, real money, that ain't going to get you nowhere, right? It ain't going to get you nowhere. Because I'm going to tell you right now, you can do it a couple times, but if you are not consistently profitable and if you cannot identify the things that I'm about to tell you on charts, you will have green trades that go red and you will be miserable, right? Because I'm sure most people will not go back over their trades like they should and see where they went wrong. What is it that they did not see? So let's do it. The S&Ps right off the bell put in this pattern, this bullish pattern that I mentioned in chat, like the candles are the same size and it is just going down and down and down and down. There is no type of bounce, hold, anything, right? This is a bullish, float down. These wicks were insane. In the morning, I was pre-cautioned for a pullback. Not that I was expecting one, not that I was hoping for one. I was just not blind to the fact that we could have had a bounce back, right? Whether that's to 441.50, which we did pre-market. You did it real quick in the morning, but after the first few minutes, when I seen the candles that were put in, we were coming to the downside, and there was your fight to stay afloat. So this time here is from 9:50 to 10:30. Right? Well, 10:30 is when we broke. So 9:50 to 10:20. Call it from 10 to 10:30. All right. This circle here is it's like in between here. Oh my goodness. Was my last take profit for a few reasons. All right. When I trade, it all depends on the setup that I'm trading, right? If there's news and momentum, like there's a lot of things that I will take into consideration. All right. Off the bell. The S&Ps are weak, right? The S&Ps are weak. So AMD is what? AMD is a semiconductor. So let's go look at NVIDIA, right? NVIDIA. I was looking at NVIDIA today. I was seeing if NVIDIA could bounce off the 50-day or what was it going to do? Was it going to hold this level? All right. I didn't look at it for very long, right? But it started to find support down here. And I want to say that this is prior day's close. And you did get a bounce, a choppy one at that, a nice bull flag actually, kinda. So if you don't know, you want to start recognizing different like what is it that you're trading? Are you trading Google? Are you trading Apple, Microsoft? Are you trading a technology, a semiconductor, airlines? What is it? Okay, what is it? And how is it reacting in comparison to the overall markets like the S&P, the Qs, the Dow? How is it reacting from whatever sector that whatever it is that you're trading, what sector it's in? How is it trading to the indice that it is in, right? If it's a large cap. This doesn't really pertain to small caps, but it could for intraday trading or trading. So we come in the day with a small gap up on AMD. I noticed yesterday Nvidia and AMD, I've been noticing it for a while, but they've been, since Nvidia has had its price upgrade, target upgrade from analyst upgrade, it's been, back on the strength it's been on the strength side. It hasn't been a weak stock, it's actually been a stronger stock. Even if it's going down, it can still be strong because it may not be going down as fast as the rest of the market. The rest of the market may be pulling down past the double top, and Nvidia just isn't even at its double top yet on the daily chart, right? Stuff like that. So this morning I seen the weakness in AMD, right? It was about right here when I noticed AMD, right? What did I do? I did not just jump in and buy it and go short, right? Why is that? Well, we have the S&Ps right here that I know are getting ready to come into the 50-day moving average is above us. Yesterday's close was right around here, right? 440, is that where it was? Right? It was, yes, so in that area. All right, sorry. Yeah, it was 439. I'm sorry. I don't know why I didn't know that, but yes. I just want to make sure everything is correct. So I am expecting the S&Ps that are coming down to prior day's close, right, to possibly have, a dip buy, and I want to see if the S&Ps do start to curl themselves back up. Why do I want to look for that? Because if I am short Nvidia, I do not want I want to have the overall market at my back. I don't want to be swimming upstream or trying to walk uphill. I want to walk downhill. I want to make life easier on myself. All right? Basically, if the trend is up, I don't want to go against the trend. AMD finally gets its bottom in down here at 105, right on my key support level. All right, so I went through the daily. You have to do your work, guys. You need to know where all your moving averages are, from the weekly chart to the daily chart, all that fun stuff. AMD is above all its weekly moving averages right now, I'm pretty sure. They're probably getting close. Knowing that, I seen a break through the 100-day moving average, and now I want to see, does it turn that 100-day moving average into resistance, right? It's already broken it. It's broken down out of the range that it has put in for the past 6 months, roughly. It's been quite a while. This whole base right here, guys, right? Right here. This whole base, it broke out of it. Right there. Right? It's finally broken out the lower end of the base. I know this. And now I know also, what do we have? We have the 100-day sitting there that used to be support. Right? Boom, boom. That's a double bottom on the 100-day. Well, what was the 100-day was just underneath of it. But more importantly, the base that it put in. 160 was a huge support level. When that support level is that big and it gets broken, you can look for it to become resistance. Okay? This is an hourly chart, is why you're not seeing it bounce up like you should. So let me go back to a 3-minute. So now you have the bigger picture, right? You have the bigger picture painted. So we get a break through the 100-day at the support level, prior support at 105.50, right? I looked for the bounce. I said in chat, guys, I am looking to get short AMD up at this 100-day moving average. Just like we've been doing. This has been a playbook that has worked all week. You've had all these stocks get to that major 50 moving average, 100-day, whatever. They've been breaking these moving averages, bouncing back. We've done it with Tesla. We did it with Nvidia, right? Now we just did it with AMD. It broke through. We bounced back to the 100-day. So what happened? So as I got my order set, okay, I accidentally took the position like here. It was like right here on this candle. It was at like 106 area. It was around 948 or so. I almost left it on, but I almost didn't actually, because I said, well, I am in the position because I set myself up, right? I get my position and I get everything ready. Now I could just set a price. I could do that. I just didn't even think about that. Because who's to say it's going to get there, then I missed the trade, right? I set my stuff up so that when I get a bounce like this candle there that you see, when you see a candle like this and you get that bounce back, right? Now it's not at the 100-day just yet, but I like to sell into strength, right? In this case, buy puts as it's ripping up to the top of the initial morning low. So right here to the left, you have the initial morning low right there, right? I am saying this is the initial morning low. I want to look for this area which lines right up with the 100-day moving average, because this hit the 100-day moving average, tried to bounce and then failed. Now we're bouncing off the support. That support should now turn into resistance. It's not a major support level, but it is, because there's a reason for it, for stopping there and getting a little bit of buying action, because there's the 100-day moving average. So I said bounce back. Right here, I accidentally got it because I had my orders ready again. I'm sorry to repeat myself. And as I was getting it ready and getting to the part where all I have to do is press the button, I got in the trade by accident, right? I hit it. I left it on until like this candle here, right? This candle here. I left it on and I told members I'm in, but I don't like this, right? I don't like this action. I'm going to tell you what it was that it's not that I didn't like it, because I took it again, but I got a better price. If you're new, I do not expect you to do this. If you get a break of a major moving average and you bounce back and you're just a few cents away from that moving average, $1 or so, I'm not telling you what to do, but I would not do what I did. Just in case it turns on you and now you've missed a trade and you're upset that you weren't able to do things fast enough, or you don't have enough time to be able to tell what exactly is going on, because the most important thing is price and time. How many of you guys get into a trade and as soon as you sell it, it rips or it sells off? How many of you? Probably a lot of you, because there is that time factor that they all know that just people can't handle it because they've been read and it's been 15, 20 minutes and they're just holding on, not realizing they have the rest of the day, right? And it always happens to everybody. Well, they see the orders, and I say it all the time on stream, which we do trade live Monday through Friday right here, 7:30 to 4, ivyleaguetradingyoutube.com. Come join us. I say it all the time. Like when something's about to break down, this candle broke down, I said it. I was like, it's about to break. As you get better and you get into your career with trading and you give it time and you're seeing these charts, there's going to come a time when you can just sense the price action and what's about to happen, like whether it's getting ready to break through a level or not. Because you can feel and sense that time factor that shorts are losing or longs are losing and they're giving up, right? You can use time and sales and all that, but again, so I get in the position, I get this quick move down, and I was literally flat. I might have lost just a few dollars because of commissions, right? The trade was actually green because it went down quick enough, and I took it off where it just bumped up those options to like just over break even, and then commissions, got me. So I said, I'm out, but I'm getting back in. So I got in by accident. I did not mean to. I pressed it too many times. I got back in, right? I got back in up here. So what do we see? I'm going to give you a few things here, guys. So I had my fib. We're going to draw our Fibonacci, right? So like I said, we have prior support. I want to line up as much as I can with the area to let me know. I need to find out where are the buyers and where are the sellers. Well, the sellers aren't here, right? Right now they're not. What do we have here? 38.2 Fibonacci. lines up with what? The initial morning low, guys. Right with it. Okay? There's more. Oh, there's more. Oh, come on. I got to bring this out so you guys can see the numbers. All right? Let me make sure I'm on. What else do we have at the 38.2? This 38.2 lines up right with the 100-day moving average. What else do we have? We have VWAP and 9 EMA right here. The 9 EMA is actually crossing down below the 100-day moving average. Where did we enter? I entered these puts as that candle ran right into the 100-day. And no, I did not get out on that wick at all whatsoever. I could already tell the type of price action that was happening. They were trying to shake people out. Not even that they're trying to shake people out, that there are buyers, right? There are buyers for whatever reason, right? It was a shaky trade. So when I see this, right, I seen this downward action. There's a support level here that you can't see because of the Fibonacci. So what do we have right here, right? Let me get rid of this box. That's the initial morning low. Remember that. This box here, this is technically a 3-bar reversal, okay? That's technically a 3-bar reversal where you have that candle to the left and the following 2 bars out take that candle. That's okay, right? But is it okay? Because at this time, at 9:45, where's the SPY, right? The SPY has not gotten down, but it did. Look, to the left, where's the SPY at 9:45? SPY is at yesterday's close, an area that I think we're going to get a bounce off of. So if we're going to get that bounce, I need to figure out, is the market going to turn around and just find resistance at a higher point? Or are we going to be selling off today, right? So what would I look for? Well, one, I'd be looking for VWAP. Do we start closing candles higher, right? 2, we never got back up to VWAP, right? On this bounce back, remember, so AMD was a bit stronger than the SPY because the SPY never bounced back. They were both at this area. And I'm watching this and doing all this at the same time, and I'm saying everything out loud so everybody can kind of see what I'm feeling or see what, kind of sense what it is that I'm saying and feeling. And they also comment that like they're seeing the same thing, so we're all on the right page, right? So AMD gets this bounce, the S&Ps do not. We stay flat. This price action right here is very important. You have a lot of wicks. But not one of these candles closed above VWAP in that 9:55 to 10 o'clock area. They never closed above or even at VWAP. Even this initial morning low right here, right? This initial morning low, they never closed back above it. I mean, you call this the initial morning low or whatever. I would call this one the initial morning low right there, right? That's the first one. Because it bounces back, makes it resistance. So AMD is bouncing back. The S&Ps are not. So now I have to say, are AMDs going to be kind of strong? Because I seen a chart of the semiconductors, and it doesn't look too bearish. We have NVIDIA who has just had a price target upgrade from analyst. Does that play a role in AMD? Right? AMD's actually been a little stronger too. So I am fighting the trend in a sense, being short AMD. I'm fighting the longer trend or the sentiment from the past few days. But today it was very weak. Look at the SPY. It opens up with a green candle. Look at AMD. It closed red. Right? It just fell out of the bed. The SPY kind of did too, but the SPY also played around a little bit. So sensing all this, right? Sensing what is going on. It's important. It's so important for you guys because it's going to separate you from winning trades and losing trades and having trades that are green go red and now you're really upset because you had a chance to make money and now you let it go red because you were not able to identify what was going on, right? We enter this trade right here and right in and at the 100-day moving average because we got the opportunity. All right. The S&Ps are still sitting down here, so I said, okay, cool. The S&Ps have not closed up at VWAP. They have not closed by this initial morning low. The S&Ps are actually weak, but are they just sitting here stalling to turn themselves around? So far, with the closing prices, doesn't seem like it. That is a whole lot of wicks. I do not get wicked out here on this, right? So my thesis, after we got this downside, right here is where I started taking profit. I notice the SPY is still, sitting there. It's still sitting there. I do not know, because I've had not only this 3-bar reversal, but again, I had 38.2 Fibonacci, I had VWAP, I have 9 EMA, and the 100-day moving average, and a previous level from yesterday. No, it was farther back then. But I have all those indicators lining up at the same area, and that's why I re-entered and I said it. I said, this is not, that accidental entry is not where I need to be. I'm actually selling this and going to see if I can get a better price. All right? That happened, and I said it in chat. I said, guys, I want to enter this trade at the 38.2, Fibonacci, 9 EMA, 100-day, all right there. And what else did we get, guys? Look at this. This also helped confirm it after I was in the trade. All right? After I was already in the trade, what did we get? You see that box here? That's your volume, right? We got a decrease in volume to the buy side. I felt good. I felt good about the trade. That's why I did not get wicked out on that candle right there. What just happened? Fuck. All right. So that is why I did not get wicked out when it tried to break itself, when it looked like it was going to break itself above the 100-day. Right? Did not get wicked out. Look at that. As soon as, because I said, like, if I'm going to, so if I have a trade and I'm going to be wrong, right? In order for me to sense that I am wrong, I'm going to want to start seeing candles close here. Close, right? And start closing here. If we're closing higher, that tells me we're either going to find a resistance zone above us for more downside, that this was a failed break below the 100-day. So until I see a close up in this area here, I'm not getting out. I'm not getting out. I got a break of the 100. I got the rejection. I got 38.2 VWAP, 9 EMA, all right there. I know above me I have a major support level that's been this whole base for 3-4 months now, right? I know I should get some good downside. The SPY is also not putting in higher lows. It's not closing candles higher. It can't even get up to VWAP and close at VWAP. I'm okay in the trade. But I am still sensing there's something with AMD that when I get profit, I want to take it. I want to take it because there's something about this. For a lot of the reasons I just said. The fact that you did have these wicks. There was some buying, right? I noticed the selling come in right here. 24,000 or 2,400 shares. 2,000 shares selling. All coming through the time and sales. The sellers were still there, right? The big sell orders were still there. So the decrease in volume. Oh my gosh, I'm going to throw this mouse out the window, right? I'm okay with the loss because I positioned myself to be able to handle and make my losses small enough that when I make and have winning trades, they are greater than my losers because I have worked on in the past and I have trained myself like an athlete, like I told you guys in the beginning, to be the best at this craft as I can possibly be, right? Even with a mess up and a hiccup, I still say I get my entry because I know if I'm wrong and we start closing back above the 100-day, right? I'm giving this thing. I'll go to the top end of that candle, 106.80 to 106.44. I'm giving it 40 cents to get what? There's still a lot more in this trade that you guys need to know, and you need to start asking yourself and knowing and pointing out as you're going through trades to give it $2-3. Okay? Now let's go on to, I got my entry right. The entry is good. We're good there. Now how do we take the profits and where are we taking them? Well, I like to, first off, take profit, in this case, would be going to the initial morning low. Right? So as we start extending, right? I took a piece off right here. Right in this area, on that tail, right? Because I know we are getting to an area where if AMD is going to turn around, this is where it would put in a higher low. If it closes here and then starts trying to run up, I know for a fact I may possibly have a double top at the 100-day moving average. I may get a break through the moving average because it's kind of been on the stronger side, but I got the break through this level where the S&Ps did not want to regain and capture with all these wicks. I still have the SPY working with me. It's not making any new hires, it's not making new highs, right? What else do I have to think about? What else do you have to think about? You need to know your ATR. This stock, when it was here, what did it close on the day? It closed 2.5% down. When I entered this trade, it was maybe 1%, right? Maybe 1% or so. So number one, I don't have news or a catalyst that's going to send this thing to a double ATR, right? This thing moves $4 to $5 in a day. And I have no news, I have no catalyst. Chances are it's just going to give me that $4 or $5 range from high to low. Now, if there is a catalyst, a news, some sort of sentiment-driven nature to give this thing a double the movement, where I could get $6 to $8 to $9, that's different. I don't have that here. That is also another reason why I'm taking profit. Where did we open? Right? We opened at 107.6, 107.60, but we also wicked up at 107.85. I will call that 108. So the high of the day is 108. And I take note, I say this stuff out loud. And I say it to members to help them through these trades. 108 is our high. I'm in the trade at 106. I'm already $2.50. I know without news and without something going on, it's going to be very hard for me to get $4 more. I should at least get $1.50 to $2.25 on the high side, and at least $1.50 to $2, but maybe $2.50, maybe $3, right? From my entry. That's going to put me at about 2%, 1 3/4, like 1.75%. You need to know these things as you're trading so you can gauge as it goes, what is it going to give you in the future. It hasn't done it yet, but you can be smart enough and train yourself to know the ATR. What's the volume like? If you have a lot of volume, chances are there's a catalyst. There's an analyst upgrade. There's news, earnings, whatever it is, a new product, anything. So as we extend to this area right here, like I just said, I took my first piece of profit. I took my first piece right here, guys. Right there at 105.75. 105.75 was my target. Why? Because I knew if we closed right there and held it to try and move higher, the trade I might be wrong. It's got relative strength. Maybe the SPY picks up. Maybe it doesn't. The VWAP is starting to catch up to the SPY, right? Look at this green volume on the SPY, right? At 954. That's a lot of green. That's a lot of sellers though, because look at that wick. Now me as a trained professional, I know half of that volume, if not 3/4 of that volume, is red. It's actually deceiving to someone who may be new. Because look at that wick. It sold off to come back up, right? So I took my first piece of profit. Down here, I literally said in chat, we should break. I feel we're going to break this because we were sitting right here. We were sitting at it, right? Right where this wick is. We were sitting there and like it was just sitting there. And I'm like, here we go. It's going. It's going to break. And as soon as it breaks and it gives me that follow through, I'm actually going to take my position off. And there's two reasons why I'm going to take my position off. The first reason, and guess what? We got it. Literally, as I said it, it was like a second, 2 seconds later, bang. Time, training, and being in the markets with time is going to be, you'll be able to do the same thing. You're going to be able to do this. One, I know when we get this break of the low of the day, it's going to give me that sharp move. The tape is going to speed up. It's going to give me that sharp move. So I know when I get that, my premium on those options are going to just go to a level that I need to take because it's going to really pay me. And guess what? It did. It did. It really did pay me. Right? It paid me. And where are we at now? Where are we at now? Sorry, guys. 106.25. 105.25. I'm sorry. I'll usually take them in 25 cent, 50 cent areas. So now where are we? I took my final piece here at 105.25. So we're now at 108 to call it 105, 6, 7, 8. You're just about at your full ATR of the day on a stock that does not have any news. We are also over 1.5%, if not 1.25%, right? Unless something happens, this trade isn't going to give you much more to offer. And I've also got the speed of that candle ripping through the lows, which is really going to pay me. So when this stock pulls back, right, it's going to suck that premium away. And then once it moves in the direction back where I took profits or even down here, which it did continue to go, you could have got over 100%, right? You could have got over 100%. I think we entered these contracts at 30 cents. It was like 31 cents was my entry. They went to 75 to 78 cents, guys. Right? You're talking 115% gain in before 11:30. Just because I take profits doesn't mean you have to. I'm not telling you what to do. Just because I take a trade doesn't mean you have to either. I told members I was taking my profits for all those reasons, from ATR, the fact that when we broke this level, it gave me that speed and that grind. It shot those premiums up. Give it to me. I'm good. I got just under 60% on that trade, right? So the bounce back. So we oh my God, undo. Sorry, guys. So that is a lot of the things that I go through, and I when I go through my trades and when I'm trading, those are all the things that I'm doing. It may sound like a lot. I promise you'll be able to get there. You'll be able to get there one day. All right? You just have to train and practice. Take days working on entries, knowing why you're taking that trade. Why are you taking that entry? Why is it there? Timing, price. Time and price is the market, man. I'm telling you guys. So, beautiful trade. It's not even 11 o'clock yet. And I've already got I've got over a 50% gain, just under a 60% gain in my pocket, right? Members held, they got whatever they got out of it. And what happened, right? And what happened? So you did get that nice extension on down through here. I did not retake this trade. I was actually done for the day pretty much. I was looking, it was just everything, as you guys know, was kind of choppy. Look what AMD did after that, right? It just chopped. It chopped. It actually came back. This is all chop. So I was able to take the meat and bones of this trade, knowing, look at this. This is the meat and bones right there. That second leg down is the meat and bones, and we were on the top of that. We were on the top of that hill when we entered that that trade today. So I knew AMD was going to be a little tough because the Nvidia has a catalyst, and AMD and Nvidia are two peas in a pod, right? Members were able to take this, and look, I also want to show you something from what I'm sensing and everything that I'm telling you on this stream, right? Let's go look at let's look at AMD, and then we're going to look at the SPY, right? Remove. And what's funny is the S&Ps are only down 0.7% because of that gap up. And what's crazy is those are the days that I love to be short. You know, I love to be short the way it's setting up percentage wise. And I'm going to go over what we're going to get into for tomorrow, what sectors were strong today that we can look at for tomorrow. So it put in this bear flag. Look how this is the S&P's low a day. Right here at lunchtime, 11:30, 11:40, okay? Look at that, right? And where's AMD's low a day? Oh, that's because there's two screens, all right? And I'm going to make this quick because I want to get into the rest of the stuff. So look at where AMD closed at today, and look where the S&Ps are. Look at this, boom, 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 all the way down. Right? That's huge. That's a huge move. What did AMD do? Right? The S&Ps did this. Right? The S&Ps did that. And AMD did that. Right? AMD did that. What time is this? 13, 14. So I'll go to the other one. I'm sorry. Right? AMD did that. Right? But we got this move. You see how long it took this move? Right? See how long it took that move? That you're talking, it started at 1300, right? You're talking 1 o'clock to 3 o'clock, 3:12. The S&Ps, probably same thing. Yeah. 1300, 1 o'clock to pretty much end of day, right? Till 3 o'clock. So what I'm saying is AMD was not a stock you wanted to be short. And I sensed that when I was taking the trade. When I'm taking profits. I sensed it. And look, I was able to catch more than this. If I put this box right here, right? I caught that trade in 3, 6, 9, 12, 15, right? Instead of 3, 6, 9, 12, 15, 20, or 18, 20. Like, come on. You know what I'm saying? So those premiums are going to pay the most because you're getting the acceleration. You're getting implied volatility. You're getting movement, right? You're getting that movement. This is not movement. This is just, I have nowhere to go. I have nothing to do today. Now, the SPY, that's a different story if you were on that trade. So this is why it's important that at least when I'm trading and I've been doing this for as long as I have, I can sense, and I have the reasonings, like I can sense when something is not going to be like, it's not going to be one of those home run trades, right? It's not going to be one of those home run trades. It's a great trade. If you can get 20% in 20 minutes, right? That's great. That's awesome, right? It might take you an hour and a half to get 20%, right? 2 hours. Who knows? Depending on the trade. So we nailed this trade from entry to exit, right? Members got over 100%. They were still in this thing, right? And I want to give a big shout out to members. So again, if you guys could take the time, if you enjoy or appreciate the insight and the education that I'm trying to bring to you guys that you're getting for free, hit the like button, subscribe if you haven't already subscribed. We have a ton of great content coming very soon, right? Very soon, right? I want to help teach you guys to have that institutional mindset, the institutional or professional trading mindset when you're in your trades. You're knowing what exactly is going on, right? Knowing there's no news. How much are you going to get out of this trade? What are your expectations, right? How much are you going to get paid? How much are you going to lose? We're going to teach you all that, right? It's important because you can fucking change your life. You can change your family's life, right? You have to train. You have to work, right? You can't sleep on your winners because you're going to wake up with a loser. I'm going to tell you that right now. It was just so important that this lesson, knowing the time and what was going on, that it was the perfect time to take the profits that it gave you. Because if you waited any longer, yes, you got your 100%, right? But if you were greedy and still had like the majority of the trade on down here because you just think that AMD's selling off today, there's no news. There was no reason for AMD to sell off. It actually, came out the gates like it was going to be weak. But I could sense up here that the buyers are still there. Semis are still needed in this world. Semis are still a hot commodity until they aren't. Nvidia comes out with news, something. They lose, they miss on earnings, then we can talk about some 3, 4, 5% days on Nvidia, 8%, whatever. Right? So that is a lesson that I wanted to give you guys. Listen, again, what's important also with this was the low volume, right? Was the low volume bounce back to the initial morning low is why I did not get wicked out. Even on the entry, the candle after the entry, right? The candle after I entered, right at the VWAP 38.2, 90 MA, and 100-day moving average, combining all those indicators together to give me my buy. And the very next candle was barely half of that of my entry candle, which was this high because there was selling in it. The selling was greater than the buying. Who is in control? Ask yourself that every day. Who is in control? Buyers or sellers? And has anything about the trade changed? Again, it's going to take time for you to do this. Like, most people would not tell you that I'm taking profits here because if it closes here, the potential, the probability that we're going to start making higher lows is great. And if it's going to make a higher low, it's going to be right here, which would be over here where this candle closed, right? It would be right there. This is where the higher low would have been for another possible tap at the 100, maybe a breakthrough. Maybe you would call that a double bottom. Bang, we seen a double bottom. That was a failed break through the 100-day. I was avoiding that. What I'm also doing, more importantly, is I am managing my risk. I am losing less when I'm wrong than when I'm right. Because if I'm taking some profits here and it gets back up and closes above the 100-day, guess what? My loss is even smaller because I've already taken profits. I've made that position down further and locked some profits in my pocket. So now I'm lost even less. I've entered correctly. I've taken profits. And now if it reverses on me at that location, right? I know, even if I'm wrong, now I'm really good. I'm still in the driver's seat on this one. This extra low, right? That low when it got past this, 3-bar reversal. When we got down here and was able to break through it and we sat here at this support, I literally called it for that break. Let's go into the day. That's a great lesson. I'm telling you guys, join us Monday through Friday, Ivy League Trading, YouTube.com. I have a lot of this. There's a lot more of these type of things that you may or may not know about the markets. Understanding the way something reverses, or if it puts in a new low and then comes right back, or puts in a new high and then reverses right back. There's a lot, guys. You need to be able to sense what's going on in real time. You need a professional at your side. It's always good to have members, people that have been doing this for a while, help guide you through your trades and your decision making to help you feel at ease, or to help you lose less, and just to have your back, right? Hey, what do you see here? What would you do in this position? I'd probably be short in here. Okay, well, I think I was going to go long here because of this. Maybe I don't see that. And I'm like, oh, maybe you're right. This is why it's good to have people to bounce ideas off of, right? We do this free 99, guys. Again, all we ask is a like and a subscribe. I greatly appreciate it. It just tells us that you guys appreciate it as well. Let's do it, guys. So what were the winners of the day? Energy. Energy was the winners. Energy and industrials, right? Energy and industrials. Look at copper. FCX, right? Let's look at CVX. I'm going to tell you guys up front, okay? If we get a real bear market, like if we start really pulling this back, right? We start really pulling things back, everything is going to get taken down with it. If there is some type of news, which I am not saying this because I think we are. I'm actually got the S&Ps up, and I'm going to show you where I'm going to be buying the dip. Man, I hope whoever's just joining did not miss and go back. If you guys missed that lesson I just went over, go back and watch that lesson. I urge you to, because it's going to change your trading and the way that you go about your entries and realizing what it is and why you're doing what it is you're doing. It's important. I'm telling you right now, if you did not get that lesson, go back and watch it. It's important. It's going to save you money, and it'll probably make you money second. Probably, it's not that it probably will. It will if you follow the instructions. I'm telling you, it will separate you from your competition, right? Again, we do this free 99. If you guys could, we're trying to get to 100 subscribers. Subscribe if you haven't subscribed, and welcome. We're glad to have you. I'm not upset or anything. I just really am passionate about this, and I want you guys to be able to succeed. I really do. There are so many things that you can do in life, and with this one tool can help you get, and using all the other things that you have can help you get some of those things in life that you feel that you would like to have, to actually obtain them. We only live once. As far as I know, we're only here once. You got to make the best of it. You got to dig deep. You got to be a dog. You got to get to getting. You say something, do it. Say it and do it. Right? There's a lot of people that just don't do. Right? Are you going to separate yourself by taking days and working on entries, working on exits, coming up with the plan? That's going to make you the best trader you can possibly be. By being real about it, being a trained athlete, taking it serious. Take your money serious. Take your life serious. If you don't, there's other places for you. At least hit the like button and subscribe on your way out so somebody that does care can find this channel and get the help that they need. All right? CVX. We've been talking about energy and CVX. This might be a buy point. It might be. Guess what? It closed green. It did not close red. It closed green almost 2% today, right? I think we said, what was it, guys? I said it last night, the night before. We should be buyers at 155, right? Is that what it is? Yup, 156.75. The pre-market low, 155, 156. So yeah, in front of 155. That's been working. If you guys have taken that trade, let me know. There's our resistance, right? Where's our support? Right here. We're buyers. That's our range right there. Right? That's our range. We get down in here, we buy. We get up here, we sell. We buy, we sell. That helps you for other trades because you lock in profits here and you're able to reduce your risk on other trades that you may be wrong on, or if you're right, you're hitting it both ways. You're making a killing. This is how you trade. This is how I trade. I will take trades like this. I see a range. I love ranges. I love them. I will take the long. I will have my stop loss, trail stop, whatever, and I will literally not look at it. I will look at it. I'll go back, but I will go trade the news of the day or something of the day. These are base hit, double hits that you can put on and get paid. This is your check. This is how trading is to be done, right? At least this is how I was taught to trade. You get ranges and things like this. You put them on, right? You're long at the bottom. You're short at the top. You get them while they're there because this is paying you, right? Your job as a trader is to come in, make the number at your desk, whatever number you have, your job is to make it bigger. There are countless ways to do that, but your job is to make it bigger. Don't matter how you do it. You just do it. All right. So energy was a strong one today. So we're going to be focused on energy. If we could get a nice little bounce tomorrow, what do you think that's going to do to some of these stocks and where are we at? right? It's trying to make this resistance right now. We'll see where we open. Let's see if we come in with a gap down. If I can get CVX at 158.90, 159, I will be long this thing to into the low 160s. I promise you that. Especially if we can get like a little bit of bounce out of the markets, right? The markets go, then you got the markets at your back. This thing should really go, this thing should really get to the upside, right? That's just one of them. So let's go real quick. Sorry, my shirt's all sideways on me. I hope you guys appreciate some of this stuff. It takes, it takes a lot to put together. It takes a lot to, come out here and put my neck out there and do some of these things. I'm going to give you guys my targets for the SPY and what I'm looking for. So what do we have? China market's open. China market right now is actually turning green, right? You should start to see, do you see these colors? How they're maroon and they're not bright red? Well, as we start swinging to the United States, we should start getting that bounce. You'll start to see it in China, we'll see it in Europe, and then we'll see it here. All right, so we may come in with a gap down. But can we take that gap or that gap up? Can we take that gap up higher? Is tomorrow the day where we had a down day and we get that gap up, pull back to close or low a day and take it on higher? Because I'm looking to get long on the S&Ps. I'm looking to get long. I still think before the year end, we will see 420. That's not only a 38.2 fib, but I'm going to go over that. We're going to go over that. I just want you guys to know what the strengths were today. Sorry. So, energy, by far the only thing green, as a matter of fact. So, we could look to see if energy actually pulls back or if it extends. We're going to want to watch this tomorrow. 1 day relative strength, energy. Basic materials was second, but it closed red. It was just about flat, 0.13%. Communication services, 0.2%, right? This 0.13. Utilities, 0.45, just about 0.5%. Financials closed red, 0.5%. Healthcare, 0.75%. Real estate, almost 1%. Consumer defensive and technology, 1%, just over 1%. Technology, whatever that. Industrials were 1.7% and finish out the day. Consumer cyclical, 1.3%. All right, so we know what's weak. We know what's strong. So we take the stocks that we know are strong for the bounces. We take the stocks and sectors that we know are weak for the downside. Okay? It's important because you can also, I make hedges out of these. If the market's going up or the market's going down and we have a stock that's going down, I'm going to take that downside with the market. And then if we have like an earnings catalyst or news or something that's causing a stock to go up, which is separating itself from the market, I will put them both on, right? If good news comes out, I'll take that short off and I'll just ride the long that I'm already in, right? I do that from time to time. There's a time and place to do that, right? There's a time and place to do that. So we can go through all this stuff if you want. Half of the year, right? Consumer services, technology, obviously leaders on the year. So 3-month relative performance. Energy still kicking ass. Energy, consumer cyclical, technology, industrials. When does basic materials? Well, they already did. When does healthcare, right? Financials, consumer defensive, utilities. When do they start swinging around? 1 month relative performance, 10%, or roughly 9.5%, just under 9.5% for technology. 1 month relative performance. Energy, almost 4%, 3.91% for energy. So we know what's strong, we know what's weak. My mouth is dry, so I do apologize if I'm talking like Mike Tyson. Your leaders and laggards. So this screener here I haven't actually looked at in a while for our maps around the world. You want to see that? Because now you're seeing BABA turn around. You're seeing China turn itself around. You had your pullback. Looks like we're going to wake up tomorrow and probably have somewhat of a gap down. If you guys are just joining us, do me a favor. Go back and rewatch this stream with the trade lesson on AMD. Is very important. It's so freaking important, I'm telling you. All right, guys, let's go to the S&Ps real quick. I want to see. We'll get into that later on. When I tell you guys my thoughts for tomorrow, we'll see where we wake up to, right? If I'm already telling you, I want to see if we get a gap up. If we get a gap up, now Bitcoin is also in the dumps. Let's not forget about that. I know we covered it earlier, but you want to watch Bitcoin because that's risk, right? What's the risk monitor, right? Risk monitor is red. So today I said 10-year yields. So we finally got the divergence, guys. Have you guys noticed that equities have been going up with yields, right? For about a month and a half, 2 months. But we finally got to a place of 4%. Once the market and 10-year yields got to 4%, the market separated itself from it. So that 4% is going to be key. If we start pulling back, you're going to want to watch for 4%. Let me put up the S&Ps for you real quick. You're going to see what I'm talking about, right? You're going to see exactly what I'm talking about. What happened, right? Where was the rollover, right? This is the information you're going to gain here, guys. Okay? This is the information. Sorry. No, it should go under. Go under. Why are you not going under? No. It's got it locked. It's got it locked. Dang it. There we go. You guys can see that, right? A little bit. Where was it? We still went up. We went up. Look at that. Right there, guys. That was the first down day on the S&Ps. 4% is where that is. I'm pretty sure it's 4%. I'm pretty sure. Right? So you can, this area. And if we break down, which I'll go back, I'll take the S&Ps off. What I can do for us is I can put us a line so we know exactly where it was when it decided to take off. Actually, I don't know why I did that. It's right there. That's our level, right? That's our level. So think about these things. If you're new, I get it. You may not understand it too well, but if you guys have any questions or comments, please throw them in the comment section. I'll get back to you if I have any questions. If you'd like to work together, my email address is in the link in the bio. I've been doing this for over 10 years. This trade lesson of the day should probably show you that. All this stuff is taped live. We do trade live right here on YouTube, ivyleaguetradingyoutube.com. All we ask is a thumb up. If you could give us a thumb up and subscribe if you haven't already subscribed. We put out a lot of this stuff, a lot of great information like this. Twitter is Ivy League Trading, YouTube, or Ivy League Trading, Twitter.com, X.com, whatever it is. So 3.85%. We started rearing our heads. 3.9. The market said, nope, I don't like it. Now I want to see if we can get our pullback. I was really hoping we were going to do it at this ascending wedge here, right? We have a really sharp ascending wedge, which this is a bearish pattern. I can give you a bunch of wedges, descending, ascending, and they can still be bullish. You have to just know what's going on. You can't just use it by the pattern. But this is showing you that you're just overbought at this. It's just overextended, right? It's overextended itself. And usually these ascending wedges that are pointing up to the sky will usually result in a pullback. Does that mean the 10-year does? I doubt it. It could sit here and consolidate. Maybe it does pull back to 3.7, 3.65, but we could see this thing back at 4.2, 4.3%, right? And I'm talking coming months, all right? So we'll go back to Thinkorswim real quick, give you guys my game plan. So if the 10s are going to pull themselves back, the 10s are very important to the market. That is small cap technology, or mid cap technology, small cap technology, even large cap technology. The higher that goes, and when these companies need money and they start running out of cash and they got to pay more in interest and they may not be able to get as much, it's going to start hurting the companies. That's why it's so important to watch that 10-year. All right, it's very important. S&Ps tomorrow. I want to see if we can get a bounce back, and I want to get up to this area here of 439.50. Okay, 439.50. We may not get back there tomorrow. We may get there Monday or Tuesday. We may not get back there. We could just continue to sell off and sell off and sell off. We don't know what kind of news we have, but I think we get a small gap up tomorrow. right? Or maybe we come back up and you see the gap down to here and it just holds. I'm going to look tomorrow to hold the low of the day today, right? I'm going to look to see if I can get along at today's close, right? At today's close. We should get a technical bounce. We had a decent amount of selling today. If you didn't catch my live stream last night, look at this. I did this last night, guys, right? There's a lot of things that I do on this channel, if you're not familiar, by helping you paint the picture for the future, right? With your moving averages, your volume, your MACDs, and your RSI, really knowing them and painting the future picture of them, and where does the stock get put at, right? Now, if you have news will trump technical analysis every day. Technical analysis also, to me, is not just going through this chart and saying support, resistance, support, resistance. Technical analysis to me is saying the chance we get a bounce off of here is great because I have support, because I have this, because I have that, and then with this and that, this is going to do that. All right, I want to teach you those things. All right, all we ask is a like and a subscribe. Thank you, guys. Look, guys, last night, right? Remember that dog in you. If you guys want that, whatever it is you guys want out of life, I need you to keep fighting, put in the work, train like an athlete. Give yourself credit for every little win. Turn those losses into a winner. Learn from them, right? I don't care how small that win is. Be grateful for it, right? Bathe in it. Soak up the winning. And you got to have a passion for this stuff too, guys. So I was also going to say that. So yesterday, the Qs, guys. All right. Look what I did. Did I take it off? Are you kidding me? No, I didn't. I got scared that I took it off. Look at that. Last night on the stream, I gave us kind of a future prediction, right, of price action, and these circles were like my price action, and we got to the damn lows today. We got to the lows today. I was like, shit, Look at the volume, guys. If people come up with these charts of institutional buying, institutional selling versus retail buying, retail selling, just look at the volume. Fuck them charts. Excuse my language. I don't mean to cuss, so I do apologize. But some of that stuff is nonsense. The only charts that matter is the ones that do matter with consumer spending versus debt, and household income versus household debt. Things like that are really good to know, right? You start seeing them creep up. But look at that. That whole range is selling. You don't have to be told what's going on, who's doing what. It doesn't matter who's doing what. They're selling, right? They're selling, right? So that is the most basic part of charting that you can come up with and using your levels along with everything else that we have, guys. So with that, I'm expecting a small bounce tomorrow. We'll see if we can get that SPY up to that level. See if we can get the Qs back up to this. That would probably happen till Monday, but 362, right? It may take a day or two or three to get back up there. Maybe we just cool down a little bit. We've done a lot, right? Watch the VIX, right? Keep your eye on the VIX because that's going to tell you volatility, right? That's going to tell you the movement, right? That's expected in a sense. It's telling you the put option price, but that put option price is also telling you the movement, right? Price and time. So we'll see what tomorrow brings. See what type of news we come up with. We will be live again in the morning, 7:30 to 4, guys. I hope you guys really learned from this AMD trade today. Again, over 50% trade, over 100% for some members. Really great trade for a few different reasons and the lessons. It's important to go back over them. And if you're kind of new at this or been doing this only for a little while, please watch this back. Watch this trade over. I go into great detail about AMD and what was going on with the markets and AMD, why I took profits, what I was seeing. And I do talk all that stuff out in real time. If you guys don't have any questions for me, I'll wrap it up. I'll give you guys a minute if you guys have any questions for me at all. But looking for energy. We're gonna go over the game plan in the morning, right? Energy, whatever has been strong. Look at what closed green today. See what happens, right? Let's go look at gold real quick. GLD. All right. Gold broke that level again. What is gold doing? This might be the resistance I'm looking for further downside. I don't know though, because it's already ran a bit. Look at that head and shoulders. Left shoulder, head, right shoulder, and it looks like, what did we do? Looks like we just rejected the 200-day moving average, guys. So I will be watching gold. I will be watching energy. But if energy goes up and that dollar can pull back, then I would not be short gold. If the dollar is up and energy's up, or if energy's down and the dollar's up, I would expect gold to be down. All right, where could gold go? Right, what do we have? Look at that line right there. That is my target. That's going to be my target. Right, 173, 174. All right, it doesn't seem like much, but it could still get. You have a gap down here too. We could come back down to lows, guys. Let's go to, so you guys, if you don't know, use your weekly charts. You got to. Why is that? Look where we're getting ready to come in. Look what's there. Look what's there. That's where we're headed. There's your 50-day. What else do we have? You have prior support from that resistance. You have prior support and resistance right there, guys. Look at that. Bang. Gap up above. Pulled back to hold it. Put in your pivot high. Boom. Bounce. Boom. Bounce. Right on the 9ME. You gapped below it. Right? Hit the neckline. Bounced up. Rejected. So this whole area is important. We're going to revisit 173. Right? 173 will get revisited. All right. These are the things that I've been taught to do. And what else do we have? If we start coming down and that 100-day start, that 100 weekly moving average starts coming down, right? You know, you have these things that match up with levels, and that's what you want to be watching for. This is how you can predict future movement. You want to be able to kind of know enough to be able to price in the time. But you guys don't have any questions, so I won't blabber much more. Thank you guys so much. If you could, it's greatly appreciated. Hit that like button. Subscribe if you have not subscribed. I'm really trying to work hard here and be able to bring some financial advisors on here so we can continue to educate and bring you the information that you need. All right, I trade live here every day, 7:30 to 4. My Twitter handle is in the link in the bio. Again, my mouth is dry because I've been sitting here talking. I hope you guys have a blessed night. Get some sleep. Just put in the work, right? Be a dog, right? Don't be stupid, but be a dog. Go get it. Live the best life that you can live. Eat that great steak, right? Take your family out on a vacation. Be a winner. Be a winner. Come join us. IvyLeeTradingYouTube.com. Thank you guys so much. Thank you for the likes. Thanks for the subscribes. It's greatly appreciated. I'm hoping to bring a couple people on here. It's coming. With your help, it can come. It's free 99 what we do here. It's the least you could do, guys. Have a great night. I will see you all in the morning.